Beast, Napoleon Macro. You might be in on a bearish thumbnail, but I think I found something pretty interesting for those who are active in the market. It may not be the best news for the long-term investors. However, it is news. It's something I found. I want to share it. So let's go ahead and get right into it, guys. So welcome back, loyal family. If you're new here, we only explore price action. Thanks for sticking around, loyal subscribers. Let's dive into the charts, shall we? So today is November the 12th, 2024, and the previous close of NEO, $4.58, slightly negative 9.4% for the day. Okay. All right, ladies and gentlemen, let's go ahead and reveal what I found. All right, so it's pretty straightforward. It's actually only happened twice. So if it does happen again, this would be something that we would measure according to the current trend that NEO is in. So let's be very clear. NEO is in an overall downtrend. The good thing about the trend right now is that the structure is still intact. Let me just point that out really quickly. I just want to make sure we are very clear before we get into this video. I think it's pretty good. So this is the structure right around here, somewhere around there, which is at about $3.46. all the way to the lows at about $1.17. So that is the structure. The structure is still intact so far. Can this change tomorrow? I don't know. Is it possible for it to break through this level? Absolutely. Because again, the trend is your friend until the end. We won't notice till the end. We won't notice in the end until it breaks down below this first level that I put on the chart, which is about 346. I didn't plan on getting to that, but I just want to make sure we are all clear. Markets are going down. Not the markets. NEO is in a down trending market, but the structure is still intact. So let's get back to where we were in the beginning here. So this interesting pattern that I discovered, it's a seller's obligation, right? Because again, it's in a down trend with the structure still intact. So the first thing that we'll be looking for is, let's get a zoom in on the number one. It's actually the rectangular white boxes that you're seeing. So let me just zoom in and, well, number one, of course, identify weekly gap up from previous candles should have been there. So let's just zoom in here and just take a look at what I mean when I say the gap up on the previous, again, candle, which should have been there. So notice on this weekly candle, see this green candle right here? January the 4th, the week thereof, 2021. The close of this green candle will be at the top. Notice the open of this red candle is actually at the bottom. So it opened higher, that's the gap up, and then it closed lower. Okay, so that's the interesting pattern to pay attention to as we take a look at all three, well, the two examples that have been verified and the potential that could happen as we show you guys the comparison to what we're comparing this to. All right, same thing here. Green candle closed here right around like $13.17. Notice it gapped up, it opened higher, right? And it closed lower as a red candle. Okay, so we're just identifying the first thing first, okay? Because I really want you guys to see this, and I want to make sure that I'm not trying to stretch the truth. Keep in mind, if you're new, we're still long this market, okay? We'll get to that in the end, but we're still long the market, okay? Last example, which could potentially end up as the last two that I just showed you. You see the green candle, the closes here at the top of the green candle. It gapped up, opened higher, closed lower as a red candle. Yes, good. Hopefully we're clear. All right, Napoleon, we're so far so good. We're comparing apples to apples. Now, number two, identify new low. Now that's where we come on over to the little cuppage formations, these little yellow areas right here, right? And this green check mark just simply represents the area in which the new low made from the previous low, if that makes sense. So this check mark is the low as the market is going up, right? And then you create the new low in comparison to the check mark. All right, hopefully you guys caught that. All right, so a new low, and the next thing would happen would be the, let's see, number three is, whoops, there we go. So number three, identify lower low. Okay, so we just hopefully identify the new low on NEO right here in comparison to the check mark. And the next thing would be to find a lower low, okay, represented by LL. Okay, so I think it's pretty clear. New low, lower low, and number four, of course, would be the bounce. Okay, a high Highly probable bounce, I think yes. So a bounce, number 4, highly probable bounce is what I should have worded it as. So that would be after the new low is created, then you get that. This represents a 78% bounce to the upside. All right, so that's the first example. Let's move on over and see if we can hopefully all be on the same page. And we've already identified the gap up weekly candles, right? Same thing here, new low in comparison to the check mark, right? Hopefully you guys can actually see that with everything in the way here. All right, new low. And then we also have a lower low in comparison to the new low, right? And then of course, in this case, we have a 126% bounce to the upside. All right, so that's pretty, hopefully we are both on the same page, or everyone's on the same page. And so far I have identified 2 identical or close enough, right, comparisons as this. I don't know if the title suggests like a scary pattern. Just ignore that, guys. It's kind of clickbaity-ish, but it's true in the sense that I did find something that may play out again. All right, so the first example, we've identified that. Second example, I do think that they have similarities, whether they're exactly the same or not. Now let's scoot on over to present day. And we do have that weekly candle that we've all identified, not just me. Okay, I'm not pulling this out of the air, guys. So the first thing the first thing we've identified, right, the gap up. Now, number 2, will a new low be created? That is a question. This is a question, not a bearish, not a bullish video. Okay. In the beginning, I did say it might not be good news for the long-term investors because a new low may be incoming. All right, and that's coming from someone who's long the market. Just give me the information as I see it. So a new low will be lower than these little areas here. Let's see which one is the lowest candle. 363. All right, so a new low will be at $3.63. So if you guys want to set like alerts on your chart, that's probably the best bet. Not like looking at your positions every single day. It's going to drive you crazy. But if you want to put an alert, I'm using tradingview.com. or whatever exchange you're using, whatever the new low is, just pull up your weekly candles, what I'm looking at, and just kind of find out which candle was the lowest. According to tradingview.com here, NYSE, it is $3.63. So if there is a break below that level, does that mean it's time to panic or start selling all your shares? It definitely doesn't mean panic, but it does mean that you must follow through with your predetermined strategy before you enter the market. Okay, so hopefully we're all practicing strategies out there as you're using real money in your accounts, right? Hopefully you guys are doing that. So that's what I wanted to stop in and let everyone know, that a new low may be incoming. I gave you the 363. That would be a new low. I'm actually interested in adding to my position at a level, and that level would be somewhere right around here. And that's at about $4.08. I'm not saying it's going to get that low. I'm not saying that's the level where you should buy. I'm saying that in order for me to maintain my bullish thesis in this neo market, if there are weekly candles closing above $4.08, I do see the trajectory to the upside eventually, but this is the moment where it appears that the market is trying to make a turnaround. And during those turnaround phases, it feels like it's just never going to end. And the long-term investors, they get frustrated. They just start throwing in the towel. And that, of course, is that very moment where I just continue to buy into the market and expect a turnaround eventually. All right. It doesn't matter how long it takes for me, as long as the levels are respected. The levels that we went over, the buy level that I just went over, the $4.08, that's the level that I would feel comfortable, as long as there's no new low created. Like if there's a wick low, you got to scratch everything out. No wicks lower than 363. Okay. The most important is the close, guys, above $4.08 on weekly candles. Everything still looks fine. Just let the markets play out and give it time to turn around and eventually make a new high higher than the previous high here at about $7.68. So again, there is no bias in this video. I've hopefully clearly laid out everything as far as what to look for the weekly candles, the exact level, $4.08. If it gets lower than $3.63, that's a new low, and we should expect to see this scary, in quotations, right, scary pattern play out again. New low, but I guess the good thing would be is there will likely be a highly probable bounce incoming, and I'll keep a really close eye on this stock so that I can identify that bounce if it happens. We're ahead of ourselves. There's no new low created. The market just closed down 9%. Everything's fine. It's still within that low risk range. Hopefully we're leaving links for those videos. Still within that low risk range that we explored. Yes, I was incorrect about it breaking out. It was until it wasn't, right? It broke below that $5, I think 72 cents level. Yeah. And then of course, here we are back within the low risk range. Okay. Doesn't mean it's a guarantee range and it'll guarantee to turn around, guys. Let's let the markets play out. I don't want to keep rambling here, so pardon me. Everything still looks normal to me. All right, so no need to lose your shirts. Continue to execute your strategies out there, right? I'm sure you have a strategy if you're listening to this channel. And that's how we're going to wrap things up. Hopefully we've summarized everything. 363 new low. That's not good news. According to my understanding, and 486 weekly candles close above. Everything's just fine. It's in preparation, okay, to turn around. All right, so hopefully this video was good and useful. All right, I put it together, as carefully as I possibly could. And let's see what happens, guys. Let's give it like 3 weeks, infamous 3 weeks. So let's see. Give me a comment in the comment section if, something changes, if it breaks below 363. I don't watch this every day, guys. I'm invested, though. All right, long. And that's the end of the video. Hopefully you enjoyed it. So if you don't mind doing me a huge favor before you go, by simply leaving an appropriate thumb, I'd appreciate it on the video if you enjoyed the content. And leave a comment so that the YouTube algorithm can promote the video on the channel. Thank you for your continued ears and support. Now, if you guys are new, we also explore the alternative market from time to time. So you can kindly join us here on this interesting journey. And we'll send it out to you momentarily. Welcome in. I'd like to take this opportunity to thank you all for your time. Remember to always have a strategy before you enter the market. All right. Keep that positive energy flowing. We'll talk soon. And bye for now, guys and gals.